Excel accounting practice problem. Invoice selling inventory. Get ready because we're going to excel. Here we are in our worksheet. In prior presentations, we put together the worksheet from a blank sheet, continuing to enter transactions into it at this time. If you have access to it, there's going to be two tabs on down below, an example tab and a practice tab. The practice tab starting at the point that we ended at in the prior presentation. The example tab, in essence, being an answer key. Let's take a look at it now. So first thing we're going to do is we're going to hide some cells so we have a fresh point that we can enter the data into. Then we're going to enter transactions related to, or which would be similar to, what software might do when you enter, say, an invoice, making a sale related to inventory on account, meaning you haven't received cash at the point of sale, but you have then the accounts receivable. There's actually a lot going on when you have that type of transaction, especially if you have sales tax, which we're going to be adding so we can see what that will do. And if you have inventory that's being tracked on a perpetual inventory system, requiring us to report this not only to the financials, but also have to track the subledgers related to accounts receivable and the inventory that is being sold during this transaction. So let's go back to the practice tab, and we're going to basically make some new area that we can use here because we don't want to keep on going down with our data input. I'd like to see it side by side. So I'm going to be copying from the skinny cell. I'm going to copy the skinny all the way over to column I, skinny to I, right click and copy, and I'm going to try to put that right in the skinny J. Skinny J, we're going to right click in skinny J and say we want to insert those items there. So there's our new set of stuff. We want to delete the stuff that's currently in it. I don't want these indentations down here. So what I'm going to do is select this first row, go to the home tab, clipboard, paintbrushy it, and then we're going to, as we got the paint on our brush that paintbrush just with one clean stroke down, and it puts all the stuff the way it should be right there. Then I'm going to delete it and delete this stuff, and we've got this nice, clean, freshly painted area that it's not wet, the paint. It's not wet. We can use it right now. So then we're going to go up and we're going to hide some of the cells here. So I'm going to put my cursor on skinny J, left click on it, and then drag on over to A. Skinny J to A, right click, and we're going to hide those items. Hide those. Okay, so that now we're ready to roll. Next thing, we want to do one more setup process. We want to take the ending balances we had last time and make them the beginning balances in our worksheet so we could focus on just the changes that are happening with this transaction while still having the detail for the full month thus far in the GL. So I'm going to copy these items, right click and copy, post them on over here in Q4, right click, pasting them specially 1, 2, 3, just the values only, por favor. And then I'm going to close down. I'm going to delete these ones in the middle. So there we have it. Now we're ready. Now we're ready to go. Now we'll do the new stuff. So we're imagining an invoice happening. When an invoice happens on account, the typical transaction will look something like this. We're going to say this is on 1/1. This is on 1/16. And this will be kind of tricky because we're going to have to deal with the inventory again. So I'm going to say this is going to be equal. Accounts receivable is going to go up. I won't put the amount right now, but I know that's going to happen. I also know that there's going to be a sales tax kind of component to this. I don't have sales tax involved, so I'm going to add a sales tax line item. So I'm going to add a sales tax, and I want to put that right underneath the accounts payable. So I'm going to select these 3 or 4 cells. I'm going to right click and insert right above it, and then move these cells down right there. So I want to put that, I'm going to call that sales tax payable. So we're going to imagine that we got to collect sales tax because some big bully or something is saying, you want to stay in business, then you got to give us our fair share, our cut of the action, which is like, we're going to say 5%. So there's the sales tax. And then the other side, we need a sales line. We don't have any sales line, and I need a cost of goods sold line down here too. So we're adding a lot of accounts. This will be somewhat tedious, but that's okay. We're going to do this. We're going to then say we're going to have these 2 items. So we could just drag it down this time, which would be the same thing as that inserting. I could just grab it like this and drag it down. So we could do it that way if we so choose. And then I'm going to take these ones above it. I'm going to think a clipboard, format paint it, and paintbrushy the format down here. And then let's add the sales line, sales. I'm just going to call it sales. And then cost of goods sold. We're also going to need that goods sold. So we have income statement account type stuff. Now I want to make these look a little bit differently. I'm going to keep them blue, but I'm going to make the text white. I'm going to try to keep that consistently going through. So I'm going to select these and go to the font group, make the text white. So the income statement has blue with the white text. I'm going to do that over here too, text white. Okay, so now we have all the accounts we need, which we'll have to add to the GL. So that's going to be tedious, but we'll do that later. So I'm then going to say that the cost of goods, the sales is our revenue account here. Let's also down here add zeros to starting point and then sum up the ending point equals the sum of these two for the ending. Copy that down. And then our totals down here, we got to make sure that they're totaling up all the way down so they're missing cost of goods sold. So I'm going to bring that down one more. So this total should be the whole column here. And now we also have a net income component. So I can sum up the net income, which will be sales and cost of goods sold. So that worksheet, notice a very nice worksheet that can tell us what the change is to those items as well. We might do some formatting to them later, but we'll sum that up for now. So this is our setup. Now we got the sales, and then we also know that there's going to be cost of goods sold affected. And then we also know that there's going to be, then the other side is inventory. So this is our normal kind of invoice type of journal entry. Now to fill in the blanks here, the first thing we might think about is actually the inventory, because we want to pull this information in from the subledger. So I'm going to go all the way over to the subledger and think about the things we're selling. Now you might say, how does this actually happen in like a software component? If I was doing a perpetual inventory system, the software would know this by the item that we sell. And so it would be able to pull in this information as you sell it. But so you got to imagine that that's helpful to know when you're trying to see how the software is going to work and how the inventory is going to apply to it. So we're going to start down here. So I'm going to start in the next line that I have availability in the ending area. We're going to say that we're selling an ELP. So we're imagining the line items, the guitars that we're going to be selling. You can imagine these being populated into an invoice form by line item. We're tracking the cost of them now, and then we'll have to think about the sales price related to them. So I'm going to say this happened on 1/16. Now we're in the cost of goods sold area, where we're going to say that we're going to imagine 5 of these, and we sold them for, well, the cost of them is 400. We're not talking sales price now, we're just talking cost. And then we're going to say 5 times the 400. There we have it. So what's left in ending inventory, if I pull that over to the ending inventory, then I'm going to multiply the 5 times the 400. So there we have that. And so what is left? We had 71 minus 5. So I'm going to say 71 minus 5. And then times 400. The flow assumption doesn't really matter because we have not changed the price at all. So weighted average, first in, first out, LIFO. So there would remain the same because there hasn't been any change in the cost for us. So there's the 64,000. We're out of bounds by the 2,000 to the general ledger. We're then also going to say in the same invoice that we sold some of these over here on 1/16. These guitars we also sold. Another line item you can imagine on the same invoice. And we're going to say that we sold one of these, and these cost $440. Multiplying that out, so that's going to have a cost, not a sales price, on, when we record the invoice of the $440. Ending inventory 1 and the $440. This times this. How many do we have left? Last time we had 6 minus 1 at the $440. So 5 minus $440 gives us the $2,200, which is left. We're also going to say that we sold some of these EPSHs. So I'm going to go down here in the next line again. This is on line 20 on 1/16. In the cost of goods sold area, we're going to say we sold 1. These cost $320. So 1 times 320 is 320. Ending inventory, I'm going to pull this on over. 320. 1 times 320. We had 16, so equals 16 minus 1 means we have 15 left at 320. So this now equals the 15 times the 320. We're now at the 4,008. So the cost of the items that we sold is now going to be this 2,000. I'm holding down control, this 440, and holding down control this 320 for a total of that 2,760. Now again, that's the sales price, not the I'm going to go all the way, and I'm out of balance, of course, up top. I'm going to buy that amount, that 2,760, which is probably an easier way to see that amount. That's the amount we need the journal entry for. But if I go all the way to the left, notice that amount is going to be the cost of goods sold and the inventory, not the sales price. So I'm going to put it in the cost of goods sold, and I'm going to try to pull that information over because that's the easiest place to put it, because that's going to be a debit. So I'm going to try to do that again, equals. I'm going to go all the way to the right, and I'm going to say we're picking up this one. We sold to the ELPs $2,000 worth, and then of the cost, and then we sold $440 worth of the EPRs, and then we sold $320 worth of the EPSHs, equals, that's going to give us our 2,760. The inventory will go down by that as well. So there we have that. Now, this part actually isn't going to show up on the invoice if we were to use the software to do this, because we don't want to show that to the customer, but it would then calculate it based on this. So when you use a scanner, this is the behind the scenes stuff that is being tracked as you record the transaction. The top part will be seen on the invoice because that's what we're actually charging the client. Let's actually post this bottom part first and see what happens with it. So we're going to have the cost of goods sold, which is going to go down here. This is going to be equal to the cost of the goods sold. And then we'll have the inventory up top. The inventory is going to be here. We're going to say that's going to go down. So we got the 46,940 minus the 2,640 in inventory because we used it to generate revenue, gives us the 44,180. That 44,180 should now tie out to our ledger all the way to the right. So going to our subledger, it's now green because it ties out to our subledger. So we got to keep in mind that relationship every time you enter a transaction, say into software. Hopefully that link will be clear though, because you'll set up the software to kind of do that transaction as you enter like the inventory items. Okay, so now let's think about the sales side of things. Now on the sales side, you might say that the sales are just going to increase by, some percentage of an increase to it. So you might have a standard markup. We didn't have a standard markup here, so the sales price would also have to be tied to those inventory items. I'm just going to put the sales price right now for it, and I'm going to say that the sales price for all of them was the 3450. And I'm not going to go into another, special calculation for it. But obviously the sales price would be something different from the cost. It could be like just simply a markup of each of the guitars, or the sales price basically per unit. So I know that's kind of a, well, let's do it this way just so you can see how that might be. We could say, and I could put more detail on a sales price list, but let's just say that I'm going to make it negative, and we sold 5 of those, the ones that we sold 5 of, we sold them for $500, plus the other ones were said we sell them for $550 plus $400 for the 3 kind of guitars we sold. I put a negative to flip the sign before the brackets, so it will be a credit. So that's going to give us our $3,450 on the sales price, which doesn't necessarily tie to the ledger here. Now, some software might track the information by the retail price or sales price too, but that amount doesn't really come into play until you make the sale. What we're tracking on our inventory system here is basically the inventory, which is at cost using some kind of flow assumption. All right, then we're going to record the sales tax. We're going to assume we pay 5% sales tax, or we have to collect 5% sales tax. Generic number, it's going to change from state to state. So we're going to use this for our example problem as a generic number. I'm going to take that 3,450 times 0.05 or 5% to get the 173. That means that we need to receive from the customer the 3,150 plus the 173, which I'm going to put here with what I would call the plug function, the negative sum of these items, taking those items and flipping the sign, giving us the 3,223. Let's do some indentation right here. Going to go to the alignment indent, and right here, alignment indent. So there we have it. Let's post that side out. Go into the accounts receivable. Accounts receivable now going up. This equals the AR 3,623. And then we've got the sales tax payable. Sales tax payable we added down here, which is going to be equal to the 173. And then we have the sales on down below. The sales down below is going to be here. That's going to be equal to the 3,450 and enter. And so notice that sales went up in the credit direction, which kind of throws people off a little bit. And so this down here actually represents that that sales are, we have it sales. The fact that it's red kind of throws it off. So what I'm going to do is I'm going to select these three. I'm going to right click on it, and I'm going to go to the format cells, and I'm going to go to the currency, and I'm going to make it none, and I'm not going to make it red. I'm going to make the brackets just bracketed but not red. And then you might even make it green if it's bracketed. So you might even go over here, and I might do a conditional format later, but make it green just to indicate that this actually means that the revenue is greater than the expenses, so that the net income increased by $690, which is a credit. So we got to get used to that brackets being credit in this case, but really easy, simple calculations given that once you understand that. Okay, we also need to post that to the general ledger, but I'm not going to do it yet. I'm going to do the second transaction, try to do this again, and then we'll post to the GL. So let's say we do it again, another inventory sale. So I'm going to go back to the sub ledger. It should tie out now at the 180. So if I go way over back to the sub ledger, we're going to say, okay, and so notice I got to adjust these items too, but we'll get back to that. We'll get back to that. So now we've got the 180. We got green here, so that looks good. So now we're going to say that we're selling an ELP again, another ELP. So I got another line item. I'm going to need more space in the ELP. We'll deal with that later. 117. That's going to be over here. We're going to say we sell 8 of those. Another invoice line item, ELP, a type of guitar. 8 of them. They still cost $400. 8 times $400 means that we're going to have the 320. Then I'm going to pull that into the ending inventory. 8,400. Multiplying that out. 8 times 400. The 3,200, I should say. We had 66 before. We're going to sell 8. So this equals the 66 minus the 8. Times 400, this equals the 58 times 400. We're not worried about the flow assumption at this point because they're all purchased at the same amount. FIFO, LIFO, weighted average will remain the same. So we sold another one too. I think we're selling one over here, a GIUSA. We sold a GIUSA over here. So we're saying that happened on 117. So we'll go to the cost of goods sold line item. 1, and then 304, and multiply that out. 1 times 304. It's going to give us the 304, pulling that over. 304. 1 times 304. We had 6 before, now we sold 1. 6 minus 1 is 5. Times 304. 5 times 304 is going to be the 1520. So we need an entry for that 304 and holding down control, the 440 or the 744. We should be off on our ledger by that amount. Hold on a second. I'm not for some reason. We just sold the 304, this one, and then the other one was way over here, the 3002, holding down control of that one. For the 3504, there's the 3504. Okay, that's the one we're going to record. Now let's go all the way to the left and do our journal entry. Back to the left, all the way to the left, do the journal entry. It looks the same, so we'll mirror what we did before. We got the accounts receivable. We got the sales tax that we're going to have to deal with. We got the sales down below. We got then the cost of goods sold. And we've got the inventory is going to go down. We're going to start with the second journal entry, the cost of goods sold. I'm going to say equals and pull this information from the ledger so you can see where it comes from. It's going to be that 3,200 plus we had. By the way, you might say, why don't I pick it up from there? You can't do that because if you do, you'll create a circle reference. So if you try it, you'll see. But then we're going to go over here and then pick up the 304 and enter. So there's the 3504. crediting the 3504. There we have that. Let's do an indentation right here while we're here. There, make it look nice, make it look fancy. And then we're going to say that that what's going to be the sales price. So once again, the sales price could be simply a markup, but these are two things that would be known by the system when you enter the item in the system. We're going to say one costs $380, one of those guitars, the other guitar costs $500, and we bought 8 of those, or we're selling 8 of those. These aren't the cost, this is the sales price of them, which we're going to say the one is we're selling for $380, the other one 500 times 8, because they're 500 each. So that would be the $4,380. And so now we'll add the sales tax, which is 5%. We've got those tough guys that are coming in saying, you want protection, then you got to pay us 5%. We call those tough guys the government. So this is going to be equal to this times 0.05. And then we add those up, and that's going to be the 4599. And then we'll sum this up with a negative sum equals the negative sum plug formula. And there we have the 4599. There's the 4599. Let's record these out then. So now we got the accounts receivable up top. Accounts receivable. Something's in it. F2 plus F2. So we bring up the receivables now to 28,722. Sales tax payable is going to be down here. Sales tax payable, F2 plus F2. We're picking up the 219 on the liability. Sales down here is going to be increasing, F2 plus F2. Picking up that 4380. And then we've got the cost of goods sold, which I don't think we've recorded yet. Did we record this yet? Did we record that one? No. So cost of goods sold is going to be here, F2 plus F2, the 3504, and then inventory up top, F2 plus F2 is going to be the 3504, bringing the inventory to the 40,676, and the net income now is at the 1,566. This 40,676 should tie out to the subledger, so we have green all the way over there, hopefully. So that's back in balance. That looks good. Now we've got to clean up our general ledger. I know this is long. This is another long. I should have done this in 2 again, but that's okay. Now we're going to clean up the general ledger. And we're going to say then what we need to do is I'm going to try to record both of these kind of at the same time again. So we're going to say accounts receivable and accounts receivable. We're doing these 2 items right here. Well, I wanted to make them green, but not by that. I want to make them green to focus our eyeballs. That's where our eyeballs are focused. And so we're going to post that to the GL over here, which is on, this is on 116 and 117. We'll just record both of them, equals, pulling over then the 3623, bringing it up to the 24,123, and then also recording at the same time 2 things at the same time. It's like juggling 2 balls at the same time in the air, but like with one hand, because that's kind of impressive. So then we got the 28,722. So 28,722 matches there. We also have to record those in the subledger for who owes us money now, because it's a receivable account. So we got to go into subledger way over here and say, okay, which customers are we dealing with? And so now I'm way over here in AS5. So we're going to say on 116, that's one of them was Anderson, and the other one is Jones down here. That's the 117 one. So Anderson was the one we sold that 3,623 for, so equals all the way to the left, picking up then that 3,623, and then Jones down here, we sold the other one for on AT17 all the way to the left, picking up then that 4599. So there we have it. Now we got, now we're back in green on the subledger, ties out to the general ledger because it adds up to the 28,722 for our 4 customers that owe us money at this time. That adds up to the 28,722 here. Okay, now let's do the sales tax. We're on this one now. So we're on this sales tax here. That one we're going to have to add because we didn't have that one before. So we got to add it. So let's go to the loan payable and add that one over here. So I'm going to say it's going to be after the loan payable. So I'm going to go from the skinny. I'm going to go from the skinny on over to the AM. Control C, put that right here in the skinny. Right click in the skinny. Right click, and then I want to insert the copied cells right there. And I don't want any beginning balances, 0 and 0 down here, and delete the transaction. And I don't think I need the second one at all, so I'm going to format paint it, and just delete the whole thing. It's just a gap, like a gap in someone's teeth or something right there. We're going to say this equals left, and we're going to say this one was the sales tax payable. And this happened, this is going to be, there's two transactions. So we said one was at 116 and 117. So we'll say this equals all the way over to the 116 here. And then the 117 there. So that adds up to the 392. We're going to have to add it to the total formula, but that 392 at this point should add up to that 392. So that looks good. Then we'll do the sales line, which once again we didn't have before, so we're going to have to add it. We're going to have to add that one. That's the sales line after the equity section. So I can do that. We're going to go over here, equity, and then we're going to add sales. So I'm going to go from the skinny here, from the skinny over to the AU, copy, put that right in this cell right there, right before the subledge. Going to right click in that area and paste the copied cells like so. And I need this one. This is perfect because I need this and the cost of goods sold right here. So I'm going to make the zeros up top, delete any other transactions in it. And this first one's going to be my sales item equals sales all the way over here. I'm going to have to change the color of it too. I got to make the text white. And this one down here is going to be the cost of goods sold. Cost of the goods that we sold. We sell guitars. That's the goods that we sold. Cost of guitars sold. That's what we should call it, because we sell guitars and guitar equipment. Maybe. So then we're going to go up top and say font, make this green or white. So that indicates that we're talking income statement accounts there. And then we're saying this happened on 116 and 117. So this will then be equal to all the way to the left to the wall, the 116 of the 3450, and the 117 equals all the way to the wall of the 117. So that adds up now to the 7830. That 7830 should tie out to the trusty TB as it does. Now we can record the cost of goods sold. We just added now. So that'll be easy. So we'll go to the cost of goods sold all the way over there. I hope this whole thing works at the end of the day. When the day ends, I hope it's working, because I'm going home either way. I don't care. When that work bell rings, man, I'm taking off, even if this isn't done at the end of the day. AX17 equals left to the wall. We're picking up that 2760. And then we're in the AX18 equals left to the wall. We're picking that 3504. That adds up to the 6264 left to the TB. 6264 ties out there. One more time. One more round. I didn't hear no bell. I only stop doing stuff when bells ring, because that usually means that lunch, there's like some kind of meal happening. And that's the reason to stop doing stuff. So 116, 117. So now we're in Z20 equals left to the wall. And we're going to say that's going to be the 2760. I've been trained like Pavlov's dogs. I stop doing stuff when I hear a bell, because I want food. 3504. So there we have it. So now we got, this goes down by that. We got the 40,676. So there's the 40,676 there. And then let's change our formulas up top to add those new accounts we added, which includes the sales tax, the sales and the cost of goods sold, double clicking on them, going to the end, plus we have the sales tax that we had over here at the bottom. We want to pick that one up, plus we have the sales right there, plus we have the cost of goods sold right there. And we still got this gap in our teeth of the GL, but we're going to leave that there. We'll deal with that later. And so there we have it. And now I'm going to double click on this one and add the same kind of change that we had. Or in other words, the second double check that I'm going to put in place is to be adding up the income accounts. So I'm going to add up just the income account so I could double check that. So I'm going to say this black area equals the income accounts of sales down here, and then plus the cost of goods sold. And that'll give us kind of a check figure to what's in our net income calculation down below. So now we got that check figure. I'm going to make this one green too. I'm going to make it green. So we'll make that green because it's actually, a positive net income. That's our net income check, giving us another kind of green check since we're doing the data input 2 places. Okay, I know that was a long and tedious process there, but I think everything is posted out. You can see how much background detail there is to a fairly simple transaction that you would record normally from just a debit and credit perspective when you're thinking about also taking care of the subledgers, the inventory on a perpetual basis, and the subledger related to it, and then the sales tax. So I'm going to go here and I'm going to make these blue again. I'm going to right click and make them blue, and we'll leave it at that.